Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Tuesday morning. We're going to take a look at some bonds and some notes to kick off the morning. If you have any questions, let me know what symbol you're looking at. Let me know what time frame that you're looking at for the setup, or maybe you have something open and you want a little bit of analysis, but let me know what symbol you're looking at, what time frame you'd like to engage it on, and we'll take a look at that together. So bonds, my theory with bonds has been this: for as much discussion as there's been about the yield curve, my question's really simple most of the time. Have we gone anywhere new? Not the interaction necessarily between two yields, but just, for example, this is the long bond right here. And I asked myself, is this really significantly outside of ranges that we've seen since, say, Q3 of last year, Q4 of last year, right? And I can't say that it is. We haven't taken out the low. As you can see here, we did punch up to a higher high, which was good news in some ways for traders looking for lower yields. But I step back and just say, have we gone anywhere new? Then I'll get into maybe the interaction between the shorter end of the yield curve and the longer end of the yield curve. Here are notes, and generally speaking, notes have had, you can see here, this lower low here, when the futures contract, this is the ZN 10-year, is moving lower, that actually means yields are moving higher. So again, are we anywhere new? And that's where I know, for as much talk as there is about the weirdness of yields and the overall movement in equities, again, this is what uncertainty that, in terms of what stock traders and investors have dealt with in a very long time, this is just new uncertainty, but it's not necessarily new price action. In fact, we are no longer in a downtrend on the daily time frame of the ES. You might be saying, Rog, are you kidding me? No, actually, it's bearish chop, no doubt. It's still below some very key levels that keep this sort of in the bearish sentiment, the bearish hemisphere. But this is not a downtrend that continues to punch down below those April 7 lows. Remember, that was the initial reaction, and we have yet to get down there, stay down there, or even close below it. So this is where I say, are we going anywhere new? Look, I think that traders and investors have become very accustomed to higher highs and uptrends. And for a lot of traders and investors, this might be the first 20% pullback they've dealt with. Now, remember, we did get a 20% pullback in 2022. And that wasn't all that long ago, but there's a good chance this might be the swiftest one that a lot of traders have seen. No doubt, it's probably one of the swiftest 20% pullbacks that I can even remember seeing. But it's not the first 20% pullback we've seen in multiple years, right? So rather than a lot of times succumbing to what is financial media discussion, which has to be creating some sort of fear because it wants to grab your attention, and it's the easiest way to do it, let's just ask ourselves, are we anywhere new? And for me, that's a really great leveling, calming, grounding kind of question where I'm not getting caught up in the panic. Do I still want to short rips? For the most part, yes. Are there still some long positions to be had? Yeah, absolutely. You might say, Rog, what are you buying? Well, we've been in and out of gold again, right? Right now, we're still in GLD calls. We're in some gold miners, although heads up, tomorrow is Newmont mining earnings. And we're in Walmart again. So there are some small pockets of strength, and there's a lot of overall short the rip, which is just the opposite of buy the dip type opportunities. All right. So as always, any questions you might have, good morning to the YouTubes as well as the folks in the Simpler Essentials room. Yep. First question up is, can we take a look? Hey there, Ryan is asking for, sure. BJ's Wholesale Club. All right. What's going on, BJ's? Hey, Ryan, this might be one of the best looking charts in the daily time frame. I'm assuming that you might already be in it. I sure hope so. Very nice look. So if you're looking at BJ, couple things to start with. What's the trend or the overall directional bias? Most definitely bullish. What else do we want to see? Well, when we have uptrends, will have mean reversions. And you can see here we've had a number of those mean reversions within the context of the uptrend. We're past earnings. Earnings are coming up. When are earnings for this thing? We're back in that blasted earnings season. All right, earnings are the 22nd of May. All right. So I would continue to focus on mean reversions. Good looking chart, really good looking chart. The next thing I would do though, Ryan, is, and this is something we do in the mastery, which is we always want to look at where BJ is trading. What's the group of stocks that it's trading with? What's the school of fish, if you will? Now, interestingly enough, it's not there with Costco and with Walmart and things like that. It's mostly in a number of mid-cap ETFs. And I don't believe it's in any major weighted ETFs, which is kind of good in this environment, because when it's not having to move with what's happening in the broader averages, it's sort of free to do its own thing. And so, yes, Ryan, I would expect, just kind of brace yourself for a little bit of just higher than normal volatility, perhaps. But other than that, just a beautiful mean reversion. It's a little bit of a wobble that we're seeing here, so it may not be an immediate bounce, but I do like that level. And then the next question would be, if you're playing shares, some moderately priced stock, are you playing options? Those are all things you can take a look at once you realize, hey, daily time frame does have a directional bias. It's in a mean reversion right now, and it would make sense to look at the long side on that dip. All right. Next up is Mondelez and McDonald's. Let's see. Jazz says I'm long. Yeah, we're long both of those too in the Sector Secrets Mastery based on our position trades. And that's a session that we've been doing since 2022. And so it's a fairly longer term portfolio. We've got McDonald's long from 253. And we've got Mondelez. I can't remember where we're long from. So yeah, all my cards on the table. I generally like the long side, but not on the daily. It's not the daily that we've been playing. It's been the weekly. So most of my interest there is on a longer term time frame for a much longer term position trade, which for me is going to be 6 months to multiple years in terms of hold time. It's not a bad name to look at for a swing. I would rather find something that has either more red candles, so it's more convincingly bearish, or more green candles, so it's more convincingly bullish. So if I take a look at Mondelez on the daily time frame, you can see here, this would probably be what I like to call a cut the sandwich in half setup. You got a range, cut the range in half, cut the range in half again. And I would say I would prefer to buy in the lower half or lower quarter of the range of the Darvis that's on the daily time frame right now. So that would put buys no sooner than 66, but preferably down around 64.6, all the way down to the low of the Darvis, which is about 63. All right, cool. Lori says, hit that like button. I appreciate that. Lori. All right, Vlad says, hey, happy to make it live. Hey, awesome. Good to have you. All right, next up is Alan. He says, I've been adding shares on Hood. Hood is absolutely on my radar. I watched an interview. It was a podcast with their chief trading something. I can't remember what his title, but it was a really good and compelling interview. And Hood's for real. Now, if I'm looking at Hood, it's definitely not for a swing. It's definitely going to be that longer term time frame. And I'm with you, Alan. I agree with your outlook. I'm with you for that longer term. So what I'd like to see on Hood, personally, is as close a revisit to about $30, maybe a little bit more aggressively, 35. And then I'll get long. And that would be with a minimum 6-month time horizon. That's what I call, by the way, for those of you that may not be familiar with the way that I position trade, let me break a little bit of that down so this conversation about Hood is in context. Every time frame has a time horizon. No one here is looking at a 5-minute time frame to gauge a trade that they'll be in for days or weeks, right? I mean, I would imagine not. 5-minute, 3-minute, 1 minute, 2 minute, whatever it is. That's usually a day trading time frame. It's a today time frame. And then if I go out to a 1 hour, that time horizon might be a few days. If I go out to a daily, it's likely going to be days to weeks. When I go out to the weekly, now I'm position trading. Rog, what on earth does that mean? Position trading for me is probably as close to any kind of investing that I do, but I don't consider it investing because even when I do a longer term, multiple year, multiple decade position trade, I'm still thinking like a trader. It's still a trade to me. It just happens to be one that's on a slower time frame, a weekly candle every week, and a much longer time horizon, months to years. I trade it primarily with shares. Some of our traders, when we do these weekly position sessions, which we do every first Tuesday of the month. So the first Tuesday of the month, which is coming up before we know it, we're going to sit down and look at positions we can put in this portfolio. Right now we've got a tally of about 22, 21 names. And I was doing a review on that in our last session. So we've got a pretty beefy portfolio that we've been doing with this session consistently since 2022. Pullbacks like what we have right now, these 20% pullbacks are definitely opportunities. In fact, great fortune is when we started this session in the Sector Secrets Mastery back in 2022, that's when we had a 20% pullback. So that's where we got to scoop up things like XLK at 121 and a number of other things. All right, that said, Hood would be the 6 month that I'm talking about. Whether you buy the shares, whether you buy the leaps, you can do either. The trigger, the alert that I send out lets everyone make their own decision. That first 6 months is what I call making the team. So one of the things that a lot of traders probably don't do as much as they perhaps should, at least in my opinion, is ask themselves, once I've spent my hard-earned dollars on shares or on leaps in a position trade, is it locking up my money and not producing, or is it producing? And that's what 6 months is about. Am I just locking up capital and it's not working for me, or is it working for me? And that ability to say, like a trader would, right? Hey, either do what I need you to do or I'm going to cut you, always keeps me in the best setups and symbols that I can find without just sort of, how many folks have a position that they bought and they invested in it? So it's buy and hold for forever, which I don't agree with. And now you realize, gosh, I could be putting that capital to work elsewhere. We're not all Berkshire Hathaway, right? We don't have billions and billions sitting on the sidelines that we can put to work. For a lot of us, we have what we have in that portfolio. We want to have the best of the best in that portfolio working for us while we sleep. And that's the objective of position trading with those shares or with those leaps on the weekly time frame. So that's something you're looking to learn more about. And it is a facet of trading. Oftentimes a very overlooked one. I like that. It's absolutely been on the list, Alan. And that's the price area that I'm looking for. I don't know that I'm going to see 30 again, but somewhere between 35 and 30 would be a welcome opportunity for the long side. All right. Next up is, let's see. Hello, Raghee. Thank you for this live free session. My pleasure. I am speculating on the quantum theme. I'm choosing stocks with high volume. Besides that, any suggestions? I haven't done a lot of quantum. So what I would do if we were sitting together in the mastery is, first thing I would do is go try to find some quantum computing ETFs. And typically where I end up looking at, so I'll show you right now, what I end up looking at is QTUM. QTUM. All right. Then what I'll do is I'll crack open QTQM and I'll see what the holdings are. And sometimes that ETF might be a great way to look at multiple, not only stocks in it, but whether or not I want to dive into one stock. Palantir is probably the most popular, but I think a lot of folks would be surprised to know RTX, NOC, BABA, IBM. Maybe not IBM would be a surprise, but you can see there's a number of stocks in this group. So I would start, that's how I would start. I want to have a list of names that I'm at least familiar with. And then, yes, when I say high volume, in this particular scenario, I'd like to see at least daily volume of about 500,000 shares a day. And then if you're thinking about options, I would like to see a minimum amount of open interest in the strike that I'm looking to buy. But that's how I would start the process. And there probably are a number of different quantum computing ETFs. That's the one that probably comes to mind first. And then the other one, I think it's VOO. Yeah, I have some recollection of VOO being something I was scanning. Yes, I don't know why I was looking at VOO. But the stocks that are in QTUM would probably be where I'm looking to begin that discussion. And I don't have any skin in that game, quite frankly. I really haven't done a lot. I probably have quantum exposure by way of names that I already have, like IBM in my portfolio, or things that I would trade like RTX. I don't know if you noticed, Nokia was there too. So there are some interesting names there. And I would start. That's the way I would start. And it's going to be a consistently evolving narrative for sure. Thank you for the question. I don't think anyone's asked me that in a bit, and I haven't thought about it in a while. So thank you for the question. All right, let's go take a look at what's going on with the broader averages as we start off the morning. And yesterday was probably peak. Oh my God, this is the beginning of the end. Look, gang, I think that first of all, when we panic, when there's this consistent, oh my gosh, what's happening type scenario, let's remember that usually psychological levels, 50, 100, 5,200, 5,300, these are going to be where a lot of orders are waiting. Let's also remember that as of today's session, while still bearish, this is no longer the downtrend that it was between April 7 to April 17. So we have a good 10 days of very, very heavy action. Bearish chop is still bearish, right? A downtrend usually suggests lower lows and lower highs. Chop means there's likely going to be a favoritism to the downside, but we're likely not going to consistently break down to lower lows. Same thing goes with bullish chop. If you're thinking about bullish chop versus an uptrend has an expectation of higher highs and higher lows, while bullish chop has generally bullish movement, but not to those higher highs. So, every day it's probably best to take a look at things in two ways. Is there not a trend? It's hard to find trends that aren't necessarily up or down. We got a lot of chop. Make sure you're moving with that bias. So bullish chop versus bearish chop. And then also maybe shorten the time frame. One of the things that we just did yesterday was I put on a trade in Walmart, but rather than going out to May, I just played to the end of the week. I'm looking for a very short-term target. Get in, get out. There's nothing wrong with, at the moment, being very, very, very nimble. And that would keep us from having to worry about the next 5 tomorrows. Day trading has a certain freedom because, frankly, day trading is, I don't care what happens tomorrow. I'm bullish today. I might be bearish tomorrow. Heck, day trading sometimes can be, I'm bullish in the morning and I'm bearish in the afternoon, right? So there is a lot of freedom in the I don't care what happens tomorrow type timeframes of maybe a 5-minute time frame and even an hourly to a certain degree. But being able to keep in mind that some days in bullish chop are going to be down and some days in bearish chop are going to be up, and that follow through is what's so difficult. I think to add to that challenge is that the volatility is still not as crazy as it was to the beginning of the month, but it still is occasionally exceeding the 68% probability. So if you're wondering, gosh, this is kind of a tough environment to manage risk in, to place stops in the way that we normally would. Well, normally would means we have normal volatility. Abnormal volatility makes risk management very challenging. So what we've been doing is reducing size, being far more discerning, and then continuing on with the process that we know is time tested. Focus on volume, focus on volatility, find as good a directional bias as we can, engage that level, and then keep the time frame, when possible, when needed, a little bit shorter in terms of expectation of follow through. That's the plan, gang. As always, thanks so much for being here for Charts and Coffee, and I'll see you tomorrow, same time, same station. Be good to each other.